What's up, traders? A lot going on in these crypto markets lately, so I thought we would take a quick minute and have a look at Bitcoin. It's been a while since we looked at more of the long-term scope, and we've been focused on the short-term price action above the 200 moving averages. I'm sure you already know, but it's important if we want to determine where an asset's going into the future that we look back at where it came from. So that's what we're going to do today on Bitcoin and do a little bit of long-term technical analysis. So let's switch over from our area pattern to our regular candlestick patterns and have a look. So if we just pop up the drawing tools here, we'll see a hypothetical scenario that I had drawn on here a while ago that appears to be playing out. So we have our first leg down, and that's our 1. Then we have the 2, the retracement of the 1. And then we have our 3, our longest leg to the downside, followed by a 4, replacement of the 3. And now we finish the 5th wave to the downside, and that gave us our bottom right around 15,000. Since that level, we've been pretty aggressively moving to the upside, but I'm still not convinced that this is the beginning of a new bull market. I still think there's a very high probability that we're getting ready to put in a lower high and that we're actually going to be going down lower to a new cycle low. So let's just take a look and say that that was potentially going to be a scenario. What would invalidate that thought process and what would reinforce it? So right off the bat, what we want to do is take our Fibonacci tool and we're just going to draw from the top of the all-time high down here to our recent low around 15,000. So we have from the top here to the bottom right here, and we saw initially we pushed up to the 236 off of the lows. We found support on it, and then we broke down through that level and found support perfectly on the 200 simple. And that's where we were able to enter our next scalp position and ride this to the upside. And then we shot straight up to the 382, consolidated above it, and then we saw another push up here, and it looked like we were headed up to the 0.5, but now it looks like we're rolling over. So the real question is, are we just going to come back down here to the 382, find support, and then we can get a push up to the 0.5 or potentially the 618 where we can put in what looks like it could be in this scenario a macro high before we go substantially lower? Or do we already top out? We're coming back down here to find support, and then eventually we'll continue to the upside or continue to the downside regardless. So what we want to do is zoom in on this point right here and see, can we figure out any kind of actual structure inside of this area? So essentially what I'm looking at is we had this initial drive up here from the lows and put in our initial 1, and then we had a retracement of that 1, and then we push up here again and we topped out our 3 and then had a potential retracement of that 3, and it was higher than the 1, so it fulfills our rules. And then we pushed up here one more time and potentially put in our 5. So what I'm curious is, did we just complete another 5-wave structure inside of this retracement and now we're getting ready to retrace this entire 5-wave structure, or do we still have further upside? So the real question is, can we look at the 1 and the retracement? Can we look at the 3 and the retracement and then determine anything about the 5 and the potential retracement? So the simple way that we're going to do that is we just take our fib tool and we're just going to go from the lows right here to the top of the 1 right there and see how deep was the initial retracement. So we had a push to the upside. We came back down to the 618, and that's where we found support. So we had a 61.8% retracement of our 1. So that's important to note. So now we're going to take our fib tool and we're just going to project out our Fibonacci extension target. So we go from the top of the 1 to the bottom of the 2, and then we see as we get lower and lower, the target to the upside gets higher and higher. So we see here we had the initial 2.618 Fibonacci extension. We shot above that, and then we actually came down, found some support, and then we pushed up even higher, and we almost perfectly targeted the 3.618. So we had a 61.8% retracement of the 1, and then we had a 3.618 Fibonacci extension of that retracement to the upside. So now that we have that in play, we know, okay, this is trading very technically. We had a perfect 618 retracement. We had a perfect 3.618 fib extension. So now let's see for our next one. So now we're going to take that same drawing tool from the bottom of the 2 to the top of the 3, and then we're just going to see how deep was that retracement. And here we came down here to the 0.5, didn't quite get to the 618, but we stopped perfectly at the 200 simple. So we know this thing is trading very, very technically. It would have liked to get down to the 618, but the 200 simple was enough support. It would have liked to stop at the 0.5, but the market really wanted to touch that moving average. So again, we saw a 618 retracement. We see between a 0.5 and a 618 retracement. We saw a 3.618 Fibonacci extension. So let's see if any of that translates to our next wave here as well. So now we'll go ahead and delete that tool back off of our chart. And now we're just going to take that same fib tool and we're going to go from the top of the 3 down here to the bottom of the 4. And then once again, we're going to look at where that Fibonacci extension target is. So the 1.618 was that initial push up right here and had me thinking that we potentially topped out. And then the consolidation started looking like a bullish reset, which it ended up being. And then we got that next push to the upside. But now this is really looking like a blow off top, as all of the move to the upside has now been removed with that pullback to the downside. So the real question is this going to be the macro top, or can we get one more push up here in the meantime? So if we just turn off the auto function and kind of zoom out right here, we'll see our next target to the upside would be all the way up here at the 2.618, and that is closer to like 38,000. And that actually lines up, obviously, the 0.5 here at 32.5 or the 0.618 at 38.9 roughly. So there is still a possibility that we're going to come up here to the 2.618. So how are we going to tell? What could we use to determine if we have already topped out? So let's turn back off that drawing tool, put our auto back on here, and then let's take a look at this fifth wave here. And we're going to try to figure out, hey, has this fifth wave actually topped out? So if we go from the bottom of the 4 to the top of the 5, at least for now, what we're looking for our initial indication that this is potentially topped out and we're now going to start retracing using our Fibonacci levels is we need to touch the 0.236. So that is our first level of support for our Fibonacci retracement. Once we reach that level, we oftentimes will bounce back up, put in a lower high, and then we'll go into a deeper retracement to the 382, 0.5, 618, etc. So that's what we're looking for. So for me, a very, very strong distinction for this market as to whether or not this is a top. It may not be the top, but at least a top would be a touch of 27,895. So we'll call it 27,900. So if price action comes down to 27,900 before it takes out the recent high up here, the top of the 5 that we have drawn in, that's going to tell me that we have topped out. We'll likely get one more pushback up to the upside, and that will be used by market makers for liquidity. They'll sell into that, we'll put in a lower high, and then we'll go into a deeper retracement. Obviously, we still have the 382 macro support right here from the all-time high to our recent low, but the 382 of this move right here will be our next target. So I'm going to flip this one to green as we normally do. And essentially what we're looking for is, do we hit this 236 target first? And then after that, are we headed to the 382 or likely back down to the 0.5? Now, it's no secret, I have been calling for a retracement to 25,000 after we top out right here. And all that is just a back test of those previous support levels. So right around 25,000 is also the 0.5 Charles Dow theory retracement for the wave 5 right here. So the next question is this all correct? So let's just say hypothetically this plays out as we expected, and essentially this is the top of the 5. We come down here and we hit the 236. We come back up here and put in a lower high, and then we come down here and see some kind of retracement, either to the 382, possibly to the 0.5, the 618. We're just going to sketch in at the 0.5, and we see around the time that might happen that the 200 exponential might be getting around that level as well. And who knows what the 200 simple is going to be doing along the way. Could be somewhere closer to the 618. But the real question is, once we complete this 5-wave structure up here and we put in that initial retracement, are we now just going to retrace these 5 waves? So now we have a very clear impulse, retracement, impulse, retracement, impulse, and then now we're starting that potential retracement. But realistically, we know that what really gets people the biggest losses when it comes to Fibonacci levels is once we complete a 5th wave, people don't realize that the 5th wave is completed. So they try to buy the Fibonacci retracement, expecting higher prices, not realizing that not only are we retracing this 5th wave right here, but actually once the 5th wave completes, we actually retrace the entire 5-wave structure. So I'm going to switch this one to blue, and that is our fib from the macro low right here at 15,500 to our most recent high right here at 31,000. Now, before we can even start using this blue fib right here, we need to validate the initial green fib touch. So we need to hit that 27,900 level first before any of what we're going to do from here is even potentially valid. So once that happens, assuming we come back up here, put in a lower high, and then we come down here and start retracing into the deeper green levels, what we're going to actually look at is now the blue fib and see, do any of those levels line up? Can we see some confluence or potential target areas that we would be likely to stop, reverse, and then eventually continue to the upside? Or if we break through, then we're going to think, okay, this actually probably is just an initial retrace of the move, and then we're probably going lower. And we'll talk a little bit more about that shortly. So once we come down here to the green fibs, we're going to see what's going on. People are going to try to buy support and then assume that price is going to go higher. But the real question is, and the real way people get tricked is oftentimes when we're now actually retracing the entire blue 5-wave structure. So now what we're going to look at is the retracement of the blue fib and where that could potentially lead to. So we have the initial push down here, and then we see the bounce, and then we come down lower. Well, at some point in time, we want to see a touch of the blue 236, again telling us, hey, that likely we're correcting this entire 5-wave structure. And then again, depending where that bounce comes back up to, we don't know where it's going to be. Maybe it's here, maybe it's here. But essentially, we're going to go lower from there, and then we're looking for a minimum retracement of the 382. So somewhere around there. So we can see the potential retracements on these are actually fairly similar. And we could get a deeper retrace down here to the 0.5 or the 618 of the macro structure. That would obviously be scary, as we would have lost our daily 200 exponential and simple. We could lose the 200 exponential, but come down here, and by the time the 200 simple gets there, we find support one more time, another higher low, and we continue to the upside. Any of those things are a possibility, but the key for us is to pay attention to these key levels. So once we touch that blue, once we touch that green 236 at 27,900, that's confirmation we're at least retracing the green fib. And then once we touch the blue 236 at 26,400, that confirms that we're actually retracing this 5-wave structure. And then from that point in time, what we're looking for is we almost always will push down to at least the 382. So here we have the 382 in green or the 382 in blue. So it could be somewhere in between, like the 24 to 26,000 level. Well, we want to see a retracement back here to the 25K level. So that seems like that could be a key area. We could come down for a deeper retrace. The green 618 would be right here, or the blue 0.5 would be down here at 21,900, or even the blue 618. But again, if we go all the way back to 20,000, that's going to really put the trend in danger, as we would be threatening that previously higher low. And the last thing we want to do is take out that low and then lose the 200s, because that's just going to look like this is rolling back over to the downside. So we have some hypotheticals, we have some key areas to look out for, and we know essentially some key validation points for whether or not the green fib is valid, and then also whether the blue fib is valid. And the green fib is already almost valid, but we still have quite a way down for the blue fib. So let's go ahead and clean all this off, and then we want to take a look at the bigger picture again here real quick and just kind of see, hey, can we get any kind of other information from this Bitcoin chart as is. So we have from the all-time high right here down to the recent low, we have the internal fib retracements. We know that we'd like to see it come up as high as the 618. It could potentially top out at the 0.5. There's also a possibility that it's already topped out. Now for me, I would much rather see price action top out specifically at a key fib level, but we see sometimes that's not going to be the case. Like with the top of the 3, it was kind of in no man's land in between, and then potentially that could be the top of the 5 in the same situation. So you can draw a lot of fibs from a lot of other places. Obviously we have the previous high right here, and if we take the fib to the low right there, we can look for a Fibonacci extension. The 1.236 is where we're at now, maybe the 1.5 or 1.618. We can do the exact same thing, assuming people are still fibbing, from the top of our 2 retracement all the way to the downside, and see, oh wait, hang on, that actually looks like that's what people are paying attention to. So we saw once we took out this peak right here, you know, that's no longer relevant for the fib swing, but we could use that for a Fibonacci extension target to the upside. But now if we take our swing from the 2 right there, and let's go ahead and switch that to orange. If we have our swing from the 2 right here all the way to the low, that gives us some pretty technical levels. We see the initial push up here tag the 382 perfectly. Let me extend that out just a little bit. It tagged the 382 almost perfectly. And then we came up, found some support at the yellow 382 and also the 0.5 in orange. And then we topped out perfectly at the 618 in orange. So there's a possibility, based on this previous swing right here, which a lot of market makers, bots, algos would be using, that they're actually not going to be using the all-time high. They're going to be using the last substantial Fibonacci swing. So again, that gives us a very technical target that potentially could have already been met. So is there a possibility that that was actually the top of the B before we go lower? Or are we going to push up here a little bit more? We just need to consolidate first. Either one is a possibility, but the way I'm looking at this right now, this is a pretty clear 1, a 2, a 3, a 4, a 5, like we talked about. So unless this thing finds support somewhere above our yellow 382 and orange 0.5, we're probably not going to be going higher. If we do find support around that level, this could still all be part of the 5th wave up here, and we can continue to the upside. But if we lose that 382 in yellow or 0.5 in orange, I think realistically we have to look at like the 24 or 25K point for support. And then again, if we do get down to those levels, we start to compromise the overall trend. Because right now we're basing all of our bullishness off of being above the 200 exponential, above the 200 simple, and both of those being blue. And if that changes, obviously our story changes as well, and we have to respect the technicals So what if the worst case scenario does play out and we do actually top out around this area and then come back down here and go lower? Where are we likely to be headed to? Well, let's zoom out here on the big picture and we can get a much better idea. So all of this is just a hypothetical area for the top of the B. If the B has already topped, let's say, all I did was just take that previous initial leg down, or what I'm calling the A, and then I just took that and put it over here from the potential top right here. And then that gives us a target to the downside. Now, in the event, obviously, that we have already topped out, that changes our potential target to the downside. And we know as long as we continue making higher lows and higher highs, that there's no threat of us going lower because the trend will be building to the upside. And then eventually, if we take out the previous high, we're in a blue sky breakout and it's clear sailing from there. So where would those potential targets to the downside be? Well, again, the same way we looked at this situation and we said, okay, if we go from the all-time high to the low right here, that gives us a Fibonacci extension to pay attention to. I'm going to go ahead and delete these off here. We saw also a lot of bots and algos were not using that macro high. They were using that previous swing high right here. So let's look at how we do our Fibonacci's from our previous cycle low and then also from that COVID dump low as well. So we're going to take our one Fibonacci from the macro low of the 2018 bull cycle. And then we're just going to put that up here to the highs. And we see we almost perfectly came down here to the 0.5. We bounce above the 382, found support on the 382, and then we're back testing the 236. So we came down one fib level, two fib levels, three fib levels, and then an internal retracement would be one fib level to the upside, two fib levels to the upside, and then a top. So somewhere around that 33,300, and we'll call it 33. So roughly around the area we're at right now. Maybe we go slightly higher from there. So that one we're going to put in blue because that is our macro low to our all-time high. And then we also have a very similar fib, just like we said right here, where they were actually looking at the previous swing. We have the same thing with our Rona low right here as well. So we're going to go ahead and just draw one more fib in right there, and we'll make this one green. And then we'll see that the majority of these fib levels are pretty close. We see here the 0.5 in green definitely got touched. It almost got touched here in blue. We see some key little bounces and touches along the blue and the green along the way. But for the most part, it's just giving us like a range that's pretty close to each other. So rather than just looking at these as individual lines and trying to figure out which one's more important, I just look at it as boxes. And you guys will obviously see me draw these boxes all over my charts all the time. And what they are is like target areas of interest for potential entries or exits. It doesn't have to be perfect when it touches the top of the box. It doesn't have to come all the way down to the bottom of the box. But what we're paying attention to is that little box between the 0.5 in green and the 0.5 in blue. And it's the same thing when we come back down to this level again. Assuming we do get some kind of retracement at some point in time, we would expect some kind of support in between those two levels. So we'll look at that as a potential support buying area as well. And then finally, we want to put one of our red boxes up here for if and when we get up to the 236. And that would be our potential target for a top or somewhere we'd want to take profits or sell into until we consolidate above that level to potentially go higher. So we hit our initial area of interest, the 0.5 in blue and green. We bounce one fib to the upside, and now we're almost to our second fib level to the upside. And that gives us our macro target, which I'm expecting somewhere just slightly higher. And then after, assuming we're correct, that does in fact top out, we're looking for a retracement back down to this level. That could easily be our higher low. And then we continue to the upside because we would have a low, then we would have a high, then we would have a higher low, then we could potentially push up here and put in a higher high. Or if we don't find strong support around that level, or we bounce, put in a lower high, and then continue down, obviously we would be looking at the 0.5 levels again, or potentially the measure move, the initial move to the downside. But realistically, what I'm going to be targeting is the 618s in blue and green right here. And that is my macro target for a buying area if we go lower from here. Now, we don't know we're going lower from here. No one does. No matter how bullish or how bearish you are, no one knows what the market is going to do, not even the market itself. But that being said, that gives us a target somewhere in between 11,677 to 10,276 to the downside. So before we wrap up this video now, we obviously have a bullish target if we see continuation. We have bearish targets if we see a new cycle low. A lot of this has to do with money supply. A lot of this has to do with the velocity of that money. And then also obviously the health and state of the economy, money printing, central banks, et cetera, et cetera. If we go into a recession or depression, we're likely going much lower. If we go into a hyperinflationary decade, or, just realistically an inflationary decade, probably Bitcoin, gold, and any other scarce asset that there's limited supply of goes higher. So what would be the hypothetical scenario? Let's say this is the bottom and there's no chance we're going to take that out. Let's just use our Fibonacci extension tool from our all-time high right here, and then we're going to take it down here to our low right there. And let's say eventually we come up here, we find support, we keep moving to the upside, and we go to a new all-time high. Where is that going to take us to? So we have our green Fibonacci extension target right here. So my initial target to the upside is going to be the 1.236, and that is at 99,321. So if we get up here to that level, are we just going to end up going to 100,000? Yes, probably. I mean, if we're that close to 100,000, you might as well just assume we're going to go there. Of course, some people might sell a little bit early, etc. But that is my next macro target to the upside, is 100K for a new all-time high. And then what if we go a little bit higher between the 1.5 and the 1.618? Well, this is when I get really bullish on things, or at least my predictions get bullish on things, because that's going to give us a substantially higher target. Obviously, new all-time highs. The 1.5 comes in at 147,000. We'll call it 150K. And the 1.618 comes in at 176,000. So we have three targets to the upside: 100,000, 150,000, and 175,000. We have some targets to the downside, and we have a clear path that it could take to get to any of those targets. So that's it. Just wanted to do a quick little update on Bitcoin. It's been a while since we did a long-term, potential bullish, potential bearish view. Again, you guys know, as long as we're above the 200 exponential and simple, as long as they are both sloped to the upside, I'm bullish. That is literally the best area to enter markets if we're going to see the trend continue to the upside. If we put in a macro lower high right here and then continue down, once we take out the low, that's when we really start looking for those targets. Once we take out the high, that's where we start looking for our bullish targets. Now, before we wrap up, I just want to take a quick look at the weekly chart right here. The weekly chart had been looking really, really bad for a while. We broke down below the 200s for the first time in history. We lost slope on the 200 exponential, and then we actually came back up. We were able to scalp a nice position on the way back up, but we have reclaimed the 200 exponential and simple now. So we're back above them, and they're both blue. The 200 exponential is below, which is not good, but we're above all those moving averages. But what we want to pay attention to now, and what I'm really looking for on this weekly close, is this is going to dictate, the overall look of the market, just this one candle right here. Because essentially what we're doing right now is we're very close to bearishly engulfing this candle right here, which means all of last week's breakout positive price action is getting wiped out by this week. But if we go basically a couple $100 lower, down to 28,000. We're at 28,500 right now. If we were to close at 28,000, we would bearishly engulf this candle, this candle, this candle, and this candle. So we would essentially be in 1 week of bearishness, wiping out the last 4 weeks of consolidation and bullish breakout. And that to me is not good, because after that, we lose this consolidation area. We just have this one big green candle right here that basically pushed us all the way up from 22K all the way up to 28K. So we have a $6,000 zone that we could fall through. Now the beauty is we have the 200 exponential and simple right here, right around that 25K level, and right around the previous top of what we're calling the 3. And that level right there would act as strong support. So if and when we do get the pullback, I'm looking to be a buyer around 25K for support to continue to the upside. If we start to lose that level and start to slowly consolidate lower or break down lower, that's when I'm starting to look at this and saying, okay, this is actually a rejection. We're going lower, and then the trend is getting ready to flip red. So if that was to happen hypothetically and break down from here, price action was to continue lower, the 200 simple would be on top, the 200 exponential would flip back red, and then both these things would start rolling over, and we would see for the first time in all of Bitcoin's history that we would be entering into a weekly bear market. And the criteria for the weekly bear market is literally just the 200 exponential and 200 simple having a red slope. And the red slope just means that it's negative. So here it was negative, it flipped back flat. Both of them are essentially flat right now, very, very close to just neutral. But if we break down below that 25K level and start to consolidate there, and they do start flipping back red, I'm going to get just as bearish as I was back here before. The same way that I got very bullish once we were back on top of them. So that's it. Just wanted to do a little deep dive on Bitcoin. It's been a while since we took a big look at where we came from and an idea as to where we're headed. Everyone is either extremely bullish right now or extremely bearish. And it seems like nobody is willing to admit that nobody knows right now. Not the market, not us. People don't know if there's going to be sustained inflation. We don't know if there's going to be deflationary pressures going into the future. We don't know which of those pressures is going to win. We don't know if the money printer is going to turn back on, if we're going to go into a recession, a global depression. There's a million situations that could happen. And the truth is, no one knows. So the best thing to do is go ahead, have your bias, do your own research, and figure out what you think is going to happen. But be open to both scenarios. And by putting some clear areas on the chart, validation or invalidation targets, we can have predetermined areas that we're focused on so that we don't have to try to figure out what's going on in real time. So if you enjoyed today's video, make sure to like and subscribe. Obviously, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So yeah, that was fun. Took a deep dive look at Bitcoin. Let me know in the comments what you think. You think we're going higher? You think we're going lower? And what is the path we're taking? So yeah, even if the market action on Bitcoin isn't fun today, I definitely had fun looking at the chart. I hope you did too.